welcome to this session of our course on Financial Institutions and Markets. I am Dr. Sonam Bhadoria, Assistant Professor at Swami Rama Himalayan University. In today's lecture, we will explore a dynamic and constantly evolving topic, that is recent developments in Indian financial markets. India's financial landscape has witnessed transformative changes over the past few years, driven by regulatory reforms, technological advancement, changing investor profiles, and global economic integration. These developments have not only enhanced the efficiency and inclusivity of markets but have also made India one of the most promising financial hubs in the emerging world. Let's begin by discussing the most notable areas of transformation. So, starting with the introduction of T+1 settlement cycle. In a significant move, India became the first major market in the world to fully implement the T+1 settlement cycle for equities. This means that transactions are settled one business day after the trade is executed, rather than two. This move enhances liquidity, reduces counterparty risk, and speeds up the flow of capital. It also puts India ahead of most global peers in terms of operational efficiency. Now, if we talk about the massive retail participation and rise of digital platforms, one of the most noticeable trends has been the explosion of retail investor participation, particularly post 2020. The pandemic induced lockdowns coincided with the rise of discount brokers and mobile trading platforms like Zerodha, Upstock, Grow, and Angel One, making market access easier than ever before. This has brought in millions of new investors, many from Tier 2 and Tier 3 cities. The use of eKYC, Aadhaar linked verification, and app based investing has democratized market participation. The total number of Demat accounts in India crossed 140 million by 2024, a staggering growth compared to just a few years ago. Now, new thing is the introduction of social stock exchange. In short, they are known as SSE. In a landmark move toward inclusive finance, SEBI approved the framework for social stock exchange, aimed at facilitating fundraising by non-profit organizations and social enterprises. This exchange operates under the broader umbrella of BSE and NSE and allows listing of instruments like zero coupon, zero principal bonds. In short, they are known as ZCZP. The SSE represents a powerful bridge between capital markets and development goals, blended impact with investment. Then, the next concept is the growth in ESG investing and green bonds, environmental social governance, or we can say ESG investing. It is gaining momentum in India. Asset management companies and institutional investors are increasingly prioritizing sustainability in their portfolios. The issuance of green bonds by Indian corporates and public sector entities has also picked up. India launched first sovereign green bonds in 2023, raising funds exclusively for climate-focused projects. SEBI has tightened ESG disclosure norms under the Business Responsibility and Sustainability Report framework for top listed companies, which was effective from financial year 2023-24. Next is the emergence of IFSC at GIFT City. India's vision of becoming a global financial sector is materializing through the international financial services sector at GIFT City, Gujarat. GIFT City hosts a dedicated international stock exchange, the India International Exchange or India Inc., offering 22 plus hours of trading, globally competitive tax incentives, and the ability to trade foreign currency denominated instruments. Next is the introduction of IPSCA, International Financial Services Centers Authority. IFSCA acts as a unified regulator for this zone, covering banking, capital markets, insurance and fintech, a model unique to GIFT. Then the SEBI reforms in IPO process and investor protection is again noticeable. SEBI has rolled out several reforms in the IPO market. Introduction of UPI-based IPO applications for faster refunds and simpler application. Anchor investor lock-in periods revised to improve price stability post-listing. Tightened valuation disclosure norms to curb speculative pricing by startups. And to protect retail investors, SEBI has improved grievance redressal mechanism like scores, mandated risk-o-meter disclosure for mutual funds, and emphasized on investor education and awareness programs across different platforms. Next is the rising popularity of RIET, that is known as REITs and InvITs, which are known as Real Estate Investment Trust. And the infrastructure investment trusts have emerged as new age instruments providing stable returns and portfolio diversification. More retail and institutional investors are participating in these instruments, especially with REITs getting listed and offering liquidity similar to equity shares. As India expands its urban infrastructure and logistics hubs, REITs and InvITs are expected to grow rapidly. Next, the most noticeable transformation is the digital rupee and fintech integration. The Reserve Bank of India has introduced the digital rupee in both wholesale and retail formats. This central bank digital currency, which in short it is known as CBDC, is a digital alternative to cash and aims to modernize payment infrastructure. Fintech players are also integrating AI, blockchain and big data to offer robo-advisory services, real-time trading analytics and algorithm portfolio management. All these things are making investing smarter and more accessible. UPI continues to be a game changer, not just in payments but now in auto pay mandates for mutual fund SIPs and stock investments through integrated apps. Then the new noticeable thing is the development of derivatives and commodity markets. India's derivatives market, especially index options and futures, continues to expand. NSE is now among the largest derivatives exchanges in the world by volume. The merger of commodity and stock exchanges under a unified SEBI framework has improved depth and transparency in commodity derivatives. It allowing retailers and institutional participation in products like gold, crude oil and agri commodities. Here the new contracts like weekly options, commodity indices and currency pairs have increased hedging and speculation tools for the participant. Latest is the credit market reforms and bond market deepening. To develop a more robust corporate bond market, SEBI and RBI have encouraged electronic bidded platforms for corporate debt issuance. The development of bonds ETFs like Bharat Bond simplification of listing and disclosure norms for NCDs. Introduction to information repositories and better credit transparency. These type of changes are aimed at reducing the over-reliance on bank loans and they are basically shifting toward market-based credit. In conclusion, we can say the key trends of current scenario are actually shaping Indian financial market. India leads globally in settlement efficiency, which is T+1. Digital platforms and UPI have driven retail inclusion in the financial system. Innovations like social stock exchange, CBDC, GIFT, IPSCA make a new frontier. SEBI has enhanced governance, transparency, and investor safety. Sustainable finance, fintech, and global integration are becoming the new norms. As a student or a professional in finance, it is critical to stay updated and analyze how these changes are actually affecting capital raising within the economy, how the portfolio decisions are changing, how the market regulations are changing, and what is the national growth strategy. So, before we end, reflect on the following. How can India balance financial innovation with the investor protection? We have to think always about the investor protection. What regulatory gaps still exist in new age instruments? How can you, as a future leader or investor, leverage these market shifts responsibly? Thank you for joining me in this session on recent developments in Indian financial markets. This concludes our current lecture series. I encourage you to revisit the topics, stay connected with market updates, and continue building your expertise in financial knowledge. Until we meet again, stay curious, stay informed, and stay invested. Thank you. Namaste.